Hello, 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 and thanks for tuning in once again for the second of 3 series of what programs you have available if you're looking to purchase or refinance a primary mortgage that may need some renovations. In my last video, I mentioned 3 options that you may have available if you're either a current or potential homeowner. And they were the FHA 203H loan for homeowners and tenants affected by a recent disaster, the FHA 203K, and the Fannie Mae Homestyle loan. Today, I'll be touching on the FHA 203K Rehabilitation Mortgage. First off, what is the 203K? Well, it's an FHA program that enables home buyers and homeowners to finance both the purchase of a house and the eligible rehabilitation costs through one single mortgage, or to finance the eligible rehabilitation costs in their existing home by refinancing it. Pretty cool stuff. And with that said, here are some baseline requirements for this program. You need a minimum qualifying credit score of 600, minimum repair cost of $5,000, and the use of a 203K consultant is required. It may be used for remodeling and major repairs, and can be used for the purchase or a rate term refinance of a loan. Single family residents and FHA HRAP approved condominiums can fit into this loan, and finally 1 to 2 unit properties are eligible. Now that I got those few basic requirements out of the way, let's go over some pros and some cons for this type of loan. Some pros. Number 1, financing up to 96.5% of value for a purchase and 97.75% financing for rate and term refinances. It's pretty good. Number 2, as stated earlier, minimum repair cost of $5,000. It's a good starting point for repair cost. Number 3, it's great for the purchase of a home in need of major rehab and or repairs. Number 4, for refinances, it's great to use for improvements instead of using cash out of pocket. Improve instead of move, like my mom always said. Number 5, the scope of the appraisal is based on the future value after these improvements are made. The key difference with a standard loan is that the scope of appraisal is based on a current value with the standard loan. Now time for some non-pros. I'm just going to name a few. And I think I need to take a deep breath because there's a few of them. Contractor's bid cannot exceed the consultant's write-up, and it must be within the contingency percentage. Number 2, the raising or demolition of a home down to its foundation is not permitted. It's a big no, no, no. Number 3, self-help is not permitted, meaning you can't do the work on your own just because you saw a DIY show on TV and think you can do it. I'm kidding. But really, you can't do it on your own. Number 4, only one general contractor. You can't have 900 subcontractors working on your home. Number 5, the borrower and the contractor may not be related. That means you can't have your cousin Joe do all the work because he's a handyman or stuff like that. Nor can there be any employee-employer relationship with that contractor. And now, time for some fun FHA stuff. Since this is an FHA loan, there is an upfront mortgage premium that's rolled into your closing costs. That premium is 1.75% of the projected loan amount. It's a cost of the loan that ultimately will affect your annual percentage rate, or your APR. And again, because this is an FHA loan, there is also a monthly insurance that is tied to the note for the duration of the loan term. This monthly insurance does not go away like it would with conventional financing after you hit your 20% equity. I hope you enjoyed this high-level overview of the FHA 203K Rehabilitation Loan. And hopefully you can use it for a home that you like that may need some renovations when you're looking to purchase. Next up, the Fannie Mae Homestyle Loan. As always, thank you so much for watching. Stay tuned for my next episode, and remember, I loan it so you can own it. Until next time.